Good afternoon, everyone, and welcome to another episode of Tap Live. And today we are very happy to be speaking with Benjamin Soh. He's the co-founder and managing director of STACS, which is a Singapore-based fintech that look at building blockchain-based infrastructure for financial markets. STACS was set up in 2019 and has been involved in a number of projects with a number of exchanges, including Bursa Malaysia, including the Gibraltar Stock Exchange, and been working with a number of banks on enabling them with blockchain-based platform for the issuance of digital bonds, as well as ESG and green finance bonds going forward. Benjamin, so good to have you, and give us an overview of STACS. We know you were set up, as I kind of introduced, in 2019, and you recently have your pre-Series A funding of about 5 million, right? Sing dollar. Tell us, in this space that you're operating in, and in Singapore specifically, there's been a lot of action. SGX working with blockchain at Temasek with their market node, building a digital bond issuing platform. And more recently, even DBS has introduced its digital exchange and issuing the first of its security token offering. Where do we exactly fit into this space, and what are the plans for STACS?
A great pleasure to be here. Of course, you mentioned we set up in 2019, and the intention or the thesis of what we were trying to solve back then was pretty clear, because if you look at our team, we are built up of a group of industry veterans. When I say industry, I'm talking about financial industry specifically. So many of us come with more than 20 years of experience in the capital markets, and so we were trying to provide a solution to a 50-year-old problem. So back then, and even now, of course, it hasn't changed. Okay, we saw that the capital markets is operating in a model that's 50 years old based on technology that's 50 years old, whereby we are still having a lot of interdependent manual processing, okay, layers and layers of different systems, okay, embedded together, okay, or entangled together, looking at how it looks. Okay, so what we really want to do is to provide a solution, which is what we are set up to do, provide an infrastructure where now these financial institutions are able to derive certain efficiencies and also able to enable them to look at certain opportunities. And I'm glad that you pointed out all these industry developments in the recent months, actually. Yeah, because it only serves to validate the fact that our thesis wasn't wrong. Okay, our thesis is accurate in the sense that many institutions have started to look at the use of such enabling technology, okay, that would be able, okay, to bring about, okay, a new way of working in the financial sector. So we definitely welcome any of these developments, because we see them as highly synergistic. As a company, STACS, okay, we are highly focused on providing the underlying technology that could be, okay, plug-in or interoperable with other exchanges. Even if the other exchanges or other institutions, as you mentioned, could be using a different form of technology, that's absolutely fine with us, because ultimately what we are building is an interoperable system. Okay, we have already completed certain projects with our other clients already that have already overcome some of these fragmentation issues by having interoperability between our DLT platform and other DLT platform, even with our DLT platform and non-DLT platform. So to us, we welcome more innovation in the sector, as that's going to be just synergistic to everyone.
Now, a recent initiative that you have completed is a proof of concept for Bond-in-abox with Deutsche Bank, as well as the issuing bank was Union Bank, and Deutsche Bank is the initiator. Tell us more about the project. And so in terms of digital bond issuance, it's not new, right? The first ever digital bond, I think, was introduced by the World Bank, right? back in 2017, 2018. And there have been a number of banks, notably Banco Santander, and I think it's BNP, that have gone into digital bonds. And in Asia, I think Thailand, the Philippines have also gone into digital bonds. And of course, in Singapore, you have SGX and MarketNode issuing together with HSBC. And there are sizable issuance, about 1 billion worth of bonds through a number of issuers. I mean, you are still working on a proof of concept, and that's interesting because actual digital bonds have been already issued. Well, what is that proof of concept hoping to achieve?
So we actually work with Deutsche Bank, Union Bank of the Philippines, UBS, Bursa Malaysia. Okay, and therefore there's a wide variety of industry perspectives. Okay, so while you mentioned the proof of concept, I think it is actually quite worthwhile to note that we actually push the boundaries, okay, of technological implementation. Because our problem set when we look at Bond-in-abox project, right, was we wanted to overcome certain fragmentation in the market. Okay, while there have been various digital bond projects, okay, largely these were all still within a silo. Okay, and of course, rightly so. Okay, because these are all what they call experimental projects. Okay, so these were really projects that were largely kept within a single isolated ecosystem. Okay, and therefore there's actually more fragmentation that's being created. Okay, and of course there wasn't anything wrong with that because it was largely still an experimental phase for many of these projects. So what we were challenging ourselves with was actually to look into the interoperability, okay, of this Bond-in-abox platform with existing financial markets and infrastructure. So interoperability became very important. Okay, what type of payment methods are we going to use to service it? Number one. Okay, what type of information flow are we having between the current banking platforms and our DLT-based platform? Okay, and of course, number three, okay, when we call it bond in a box, in the box, right? It means that all the services of that the market will require, for example, issuance services, investor services, custody, asset servicing, all of them will be readily available within one single platform that dramatically shortens the time to market, yet with interoperability, as mentioned above, doesn't fragment the market. And of course, lastly, okay, as we mentioned in the press release, we also started looking into the areas of how we could use the Bond-in-abox platform with their smart contracts to be able to apply this into the area of ESG and sustainability linked bonds. Where we are able to see enabling technologies like our smart contracts and management of use of proceeds on the distributed ledger being able to be applied to enable better management of ESG financing. I think in summary, there were a few different achievements that we had made. Okay, that's beyond many of the projects before us.
So you describe all those previous issuance as projects, as experiments, in that they create fragmentation, that they operate in closed ecosystem. Now, Project Benja, right? The Bond-in-abox. How are you breaking down the silos and creating interoperability? And how soon can we see something more mainstream, so to speak? Kind of wider acceptance of digital bonds that include a wider ecosystem, as you described.
The previous issuances, because they were rather earlier than us, right? Although they were live, but they were also pilots. So that's why you had a certain form of silo or sandbox type of a feel to it. Okay, for us, what we wanted to do with interoperability is to connect different systems together. Okay, so we were able to establish certain interoperability execution, okay, in our project, okay, which allows us to be able to connect different banks together. Okay, so that's where we see the technology being able to support a full life implementation of a bond, okay, and still being connected to existing infrastructure. So that will open up the doors to, multiple different participants. So they do not need to even be on the blockchain, okay, if they are able to be integrated with us through APIs. Yeah, so that's what we see as the key to having a larger market size, a larger market pool, while not sacrificing the efficiencies of the DLT bond. Yeah.
Now, of course, an important ingredient to this interoperability or wider acceptance of digital bond issuance is to get more of the arranger banks, more of the ecosystem players like the custodian, the payment agents, and so on and so forth to be on the platform. How is the industry moving towards that? You have got exchanges like SGX moving into that. You have in Europe, SIX Securities, also moving into that. How do you see that space evolving?
I totally agree with you. We definitely need the arranger banks. These service providers, they actually bring a lot to the table. They bring a lot of clients, they bring a lot of experience and expertise. So which is why we are actually working with many of these banks. Okay, and I'm happy to also share that many banks are definitely looking into this. I think it's not even a secret now. Always on the news, we are able to see that multiple banks are looking into the use of DLT for better servicing. And so therefore, I think that in general, this trend is moving ahead. Okay, there's not really a threat about this intermediation to them, because I think that they still add value to the entire process. Okay, I actually see them as a partner, okay, on this journey of implementing DLT, whereby there is a very good relationship between collaborative approach between the participants. Just in our own project, we are able to see, for example, Bursa Malaysia giving us perspectives from an exchange and a CSD, whereas we have three very different banks: Deutsche, UBS, Union Bank. They're actually experts in their very diversified field, and they were also able to provide expertise and perspective, okay, from their specialty. So that serves as a model where we could be able to bring forward, from an industry-wide approach.
Obviously, you are a commercial organization, right? Now, in terms of working on this proof of concept projects, experiments, and stuff, how are you kind of creating a scalable or sustainable business from this? At some point, you need this to kind of scale up and take off.
Yep, definitely. So this is definitely not the only project that we're involved in, firstly. And from a company's perspective, our commercial company's perspective, we are actually operating this as a technology platform, software as a service. So as we put in the work first, we put in the work first to develop the platform, to have the platform to have a more complete infrastructure, APIs and front-end interfaces. We realized that this has become a complete solution, and by our business model, whereby we are charging or we are operating as a software as a service, we are actually able to allow institutions to come aboard in an easier fashion, and only when they are turning this on live, when they have live transactions, when they have pilots and going further, okay, actual commercialization of the entire product, okay, we will be able to enjoy the recurring revenue from the transactional based pricing that we have,
which is not yet, right? So unless it's it goes live and it's been commercialized.
We do actually have a few live use cases already. So some of our clients and partners are already live. There have been some press releases even before, okay, on our other projects of our partners using our platform for other services also.
Give us some examples of some of this live projects.
The Gibraltar Stock Exchange has gone live already with our platform. We also have a press release before that with Eastspring Investments and BNP Paribas. So that's also a live implementation of the platform for post-trade operations processes. So Bond-in-abox is definitely one part of what we do. Okay, Bond-in-abox is also entering the ESG space because it helps to structure ESG bonds, sustainability linked bonds. Okay, and on the other hand, okay, we also have other various integrations. You mentioned about Blue Cell, so other integrations and partnerships with a few other firms, okay, who are providing their own technology services on top of our infrastructure. Okay, so we have IoT firms, we have data analytics firms. Okay, we have big four assurances, that are able to provide services on top of us. Okay, whereby they are the ones who are leveraging on our blockchain technology to provide a better service to their client. Okay, and that's where there's a go-to-market strategy of bundling together with all these partners. Okay, to give a proper or better overall solution.
Earlier, we discussed about your Series A funding round of about 5 million, and I think in the announcement, following that, a big chunk of the proceed will go into scaling up the business in terms of expanding the team, especially in this whole area of ESG and finance and green finance. Tell us in terms of how big has the team grown now at this point?
Presently, we have around 32 people right now. This time last year, we had, I think, 12, 13 people. So we have grown almost 3 times already in a matter of a year. Yeah, so it's definitely, good growth. We have 3 or 4 more people joining just this month alone. Okay, and we definitely need to continue growing because we have quite a huge pipeline of projects and implementations that are going on right now.
Are you planning further rounds of funding in terms of what is the angle for STACS? At this point, right? You have 5 million. In terms of your financials, how do you look? Have you been evaluated?
Good thing is that we are revenue generating, since actually since 2019. Our revenues doubled from 2019 to 2020 last year. Okay, so revenue is on track, is growing. Okay, so while we are still growing, therefore we also require more funds and more partners. So we expect to have a second fundraising round later this year. Not really because we need the funds, because we still have a very healthy runway right now, actually. It's more of the fact that we want to grow our scale. Okay, we want to bring more strategic partners on board. Okay, we want to be able to scale up to more regions. So we definitely are targeting ASEAN plus 3, which is Southeast Asia and Greater China, Japan and Korea, for further growth.
Now, you work with Bursa Malaysia, you work with the Gibraltar Stock Exchange. What about closer to home in Singapore? How are you working with SGX or MES? In particular, there are few high-profile projects, right? But in relation to Project Benja, you mentioned that there can be integration with Project Ubin, right? The payment system and so on and so forth. Tell us, how is that proceeding?
So Bond-in-abox is definitely a banking platform, for arrangers, custodians, issuers, investors. Ultimately, we still need to connect to trading venues because these bonds need to be traded later, after the issuance and investing process. So therefore, we will definitely hope to be able to integrate this with multiple exchanges, including the SGX, and including the you mentioned about the bond project of SGX. So that's definitely something that we look forward to integrate. In fact, in our paper in our report that we wrote, this would be highly synergistic. Because we would be able to deliver a fully digital bond, from our Bond-in-abox integrated with the SGX. So definitely such integrations, and it's not just SGX, all over the region, as we mentioned, Southeast Asia, Greater China, and of course, not just also Project Ubin, but also newer digital payments services like Libra, if they are going on live, they rename to Diem. Yep, and even the JP Morgan and DBS joint venture, Partio, when they are ready. These are just various options and various avenues for us to explore.
Which is an interesting part of covering this particular topic, because a lot of the projects are really in the experimental stage, right? In the kind of either proof of concept or in late phases of their rollout and so on and so forth. From what you know, how long more before a lot of these pilot trials, experiments actually lead to something?
It's not that far away, definitely. I
Okay,
mean,
okay.
yeah, we started in 2019, and back then, in the first year of our operation, okay, many of these projects that you name, right? Okay, they
Yeah.
were not even started yet. They were not even a plan yet.
No chances of any of this turning into white elephants, because in the financial industry, there are many examples, right? In
Mhm.
the payments area.
They also have a very specific pain point, I guess. So I see that's why there's a very good chance of success with all of them. I mean, if you're talking about payments for Patia, for example, it's very clearly defined. Okay, payments, okay, digital payments for Singapore dollar, for example. So very
Yeah.
clearly defined. So if you talk about bond, the SGX bond product, yeah, it's a bond platform that digitalizes the entire go-to-market. Okay,
Yeah.
yeah, which is of course very good. Yeah, then if you talk about us, okay, there's a little bit about ESG, okay, covering about the end-to-end life cycle of ESG, okay, handling the post-trade processes, okay, asset servicing, okay, of the bond, and of course go to market by using smart contracts. So this is a very specific product whereby there is a clear need, okay, and there is a clear demand. Yeah, so I think there's definitely a good chance for every one of us. Okay, at least it's been a few years since, let's say, 2016 or 17, when the first wave of blockchain hype came about. Okay, it's been a few years since then that industry has had more than enough experiences and research to be able to pinpoint exactly what are problems that we're solving.
Yeah.
I think it's clear that by now everybody realized that blockchain doesn't solve everything. In terms of front end trading, we're never going to use the blockchain. Yeah, in terms of front end trading, yeah, in terms of certain what you call, okay, established processes, okay, there are various technologies that are already more than capable of handling it. So I think it's already reached a point where we are able to pinpoint certain areas for the use of ELT efficiently.
So where are the areas? So you mentioned today that there are all of these projects testing out different parts of application of DLT. So you have kind of excluded it for front end, part of it. So the workflow, the life cycle management, the post trade processing part appears to be an area where in digital bond issuance there is an application for DLT. But there are also other asset classes as well, right? Maybe
sure.
it's got more complicated processing involved. Funds, REITs, for example, those have got potential application for REIT, right? For DLT. What is holding back the some of this from going live? Is it the technology not really fully mature, or is it just getting everyone on the ecosystem to come together? Is it kind of a more organizational issue, or is it the technology issues, or is it a matter of standards and having the proper legal framework? All very entrenched issues to overcome.
Do think that it's definitely implementation. Okay, so it's definitely not legal or what you call regulatory. Yeah, because I think whatever that we are doing today, okay, is still a security, right? When we
Yep.
are tokenizing a bond, for example, it's still a bond. Yeah, it's still under the Securities Futures Act.
The act needs to in Singapore was updated, especially for this
Yeah,
reason,
yeah.
right?
But the fact is that we are not trying to change the way it operates. We are still working with intermediaries. We are not selling directly by or breaking any selling rules.
Right.
Yep. So I think that's the first principles there. We are not really trying to change the way it's being marketed or sold. Yeah. Okay. And it's really more of a technological advancement of the way it is being operated. Yeah. And so I do think it's implementation. If you think about it, it's only from 2016-17 till now, it's a period of less than 5 years where banks started to really do serious work on the DLT, right?
Yep.
So within 5 years, okay, we've gone from various iterations. So some banks started building their own, some banks started buying, some banks started doing POCs, and some banks started collaborating, right? So I think it's that through these 5 years, okay, we are now reaching the point, okay, where many institutions have already started to find ways of implementing points of integration of such technology with current processes. So it was always never going to be an overnight thing. Overnight in the sense that it wasn't going to be somebody presenting a platform, deploying it, and then taking over all the processes natively. because there is existing infrastructure, existing registry, existing depository, and of course existing investors who are used to existing applications and platforms to take care of. So therefore, I always thought that it's always a matter of implementing it incrementally, for financial services.
In this age of fintechs and shortened time to market, people's expectation is that that this should happen sooner, and but in terms of financial technology of the older days, all this thing takes a long time, right? The implementation of core banking system, for example, is a multi-year endeavor, the especially industry observers are saying they're expecting too much out of blockchain, that this is a technology that is ready to be implemented as soon as possible. In terms of the life cycle, so to speak, are we here on the uptake, or we're going to reach kind of some point of maturity soon?
Definitely, I think it's the way we want to implement it. So if we are expecting to deploy the blockchain, and take over the entire banking system, that's quite unrealistic. I do think that is a partnership. So whereby what we have done, is that we are integrating blockchain to various integration points. So such that the front end platform is still going to be the same. The backend CRM system and the servers are still going to be theirs. That are belonging to the institutions. And it's just really finding some of the gaps in between. To integrate. It actually lessens the time to market, because we are still using enterprise grade security. We're still using enterprise grade encryption. And communication. And actually, we are still using it in some of our projects, right? The existing front end or back end of the financial institution. So it's really more about connecting to the DLT platform, to our blockchain, rather than the platform replacing everything. So that's where I hope to be the best way forward, whereby we are fitting our platform into certain various processes, finding multiple touch points to integrate. And then of course following the enterprise grade standards, so that will lessen the time to market dramatically. And in terms of the life cycle, I think right now we are at the point of increasing momentum. At least for us, at least for Stacks. We have started to see a lot more interest and demand from institutions to actually get integrations done.
Now, the fundamental question is also DLT and blockchain. How essential, how critical it is, right? You mentioned the 50-year-old problem, right, with the old way of processing securities and so on and so forth. Manual process, there are a lot of inaccuracy, rework, and so on and so forth. A lot of it is just manual, and a lot of the processes are linear, right? Where the DLT adds value to the process is in terms of its characteristics, of smart contract being immutable, being decentralized, and the ability to automate a lot of those decision points, so to speak. For example, automating coupon payments and reconciliation that in the old or traditional processes is manual and time consuming. Is it a solution that only DLT can solve?
DLT is an enabler, whereby I don't think that nobody wanted to solve it in the last 50 years, right? Definitely there has been other very clever folks out there, but DLT is definitely an enabler. Again, it doesn't solve everything. It doesn't solve liquidity issues, it doesn't solve market access, but at the very least it allows digitalization that could indirectly lead to that. But anyway, DLT, we believe, distributed ledger, it does bring about benefits in the sense that we are now able to take existing trade data, for example, existing products, for example, existing data in general, find the common, critical points, standardize them, put it onto the blockchain with smart contracts, committing automation to code, and yet maintaining a source of truth. So therefore, and now is the best time, because now, the industry is at a size that it's never been before. It's only growing, and it's only reaching record highs in terms of the size. In terms of opportunity cost, it's getting larger and larger. Because and of course in terms of pressure, the market is only going to become more and more active, and the regulatory pressure or the capital requirements is just only going to get higher. Okay, so I do think that now is the best time to really have the financial industry, okay, looking to how this DLT infrastructure could be able to resolve the problem.
Getting into kind of more technical discussion, the underlying blockchain technology that Stack uses, right? There's a lot of open source technology. Are there differences? Let's say, for those that are not too technically inclined, are you creating your own blockchain technology? Are you using one of the current open source? And are there differences, or are all blockchain technology the same? Are they, Tesol, Ethereum, even R3 Corda? At least the regulated part of the industry is using it. Of course, DeFi, there's a whole lot of different open source there. Tell us in terms of the underlying technology itself, what are the differences? Yeah, what are the strengths, pro and cons?
There's various numbers of blockchains technologies out there. So we are using an enhanced version of the open source Ethereum blockchain. Okay, so at our very core, we are using the standard EVM, and our smart contracts are written in Solidity, which is the open source common language that the Ethereum blockchain uses. But of course, because we are deploying our platform for financial services, so we had to make certain enhancements. So certain things that we have done, for example, we changed the consensus so that it's no longer a proof of work blockchain. It doesn't require mining, doesn't require specific hardware.
Doesn't have a carbon footprint.
Yeah, really no different from your enterprise grade database that institutions are already running. So it doesn't add carbon footprint. So, but of course, the way we implement it is in a permission manner. So it's not a public blockchain, but it's a permission global blockchain, as I like to call it. Why do I call it? Because it's permission only to the institutions that are allowed to use it, and it's global because of course it serves everyone. Institutions are able to use it. Their clients are able to view the results. So it's not like a secret blockchain. It's just that it's a permission for certain enterprises to be writing transactions.
And there is a cost of using the Ethereum. There is cost in terms of gas, or the term to use in the industry. How commercializable is that?
So we changed that. We don't have gas because we simply, from the financial sector perspective, we need to not have gas. We can't have a transaction, that we don't know what is going to be the price. Yeah. So we do not have that at all. It's a permission blockchain that doesn't have gas, and so so we therefore do not have a cryptocurrency for utility token of the blockchain.
How do you create interoperability when everyone is using a different technology, different standards?
So interestingly, we are a big fan of Ethereum because we are using a modified version of it. So as our Solidity smart contracts, being deployed, right, we actually can take in the existing Solidity smart contracts that have already been standardized.
Who else is using Solidity? Among the market participants?
There are quite a few, right? If you look at Quorum, for example, it was a private Ethereum, although they also enhance it. Then of course Consensus is very active in this, both the public and private Ethereum space. So I think it's a very healthy community of developers. For us, for example, we are able to use Solidity ERC standards like 1400, 777, ERC20 at the very least. So these are all standards that have really been built, audited, accepted by a global community, and that helps with portability. If somebody is deploying a smart contract from into Stacks, they could also take out the smart contract and deploy it into Ethereum, and vice versa. So these are ways that we are able to keep connected to the global development. But of course, in terms of a network permission, because of the nature of the products that we are supporting, it has to be permission.
There's a number of Europeans that are into the digital assets and all that's created their own digital exchanges. But in Singapore, we have DBS that has got its own digital exchange, right? DDX, right? Now, it was set up to trade in a number of cryptocurrency in the beginning. Now they are also, issued their first security token offering, right? So
Mm.
additional assets that can be traded, that can be invested in and traded on the exchange. It is obviously a proprietary, right? All on us. How does that fit into the entire picture? Obviously, it provide investor another platform, another alternative
Mm.
to enter into this space.
So I think DBS exchange, yeah, as you correctly pointed out, is to provide an alternative venue for investors to enter alternative assets. The bond is probably just the first thing that they are going to do. Almost call it like a pilot, if you ask me. So that's great, of course. To have more venues, more exchanges where investors and issuers will be able to access. Yeah, ultimately, is the beginning of a trend.
Do you see more commercial banks getting into this space, setting up their own digital exchange?
I think it depends on the appetite, right? So some banks might prefer to be a member or a partner of many exchanges. Some banks will want to be an exchange. I guess it's really up to their commercial strategy. Yeah, but
Okay,
in general, I'm sure there'll be more
commercial,
exchanges.
this whole positioning of being, um, being a pioneer in this digital asset space.
Okay, whether banks will run their own exchange or join exchanges is really a matter of commercial strategy to each bank.
Now,
Yeah.
one of the areas that we want to discuss is also the regulated space and the DeFi space, right? The decentralized space. Do you straddle both areas, or you kind of focus mainly on the regulated space? For now,
Technology.
that's the critical word.
For technology's perspective, okay, we can do anything. Of course, we can't do everything together at the same time because of bandwidth issues. When I say for now, it's because we really don't know what the future may bring. I'm pretty sure that there will be some type of confluence somewhere down the road. Okay, so there will be some business model maybe. Okay, it's not really going to be like DeFi as we know it today. Okay,
Yeah.
it's definitely a little bit more decentralized than the traditional financial infrastructure. Okay, and it could be also something related to a totally different asset class altogether. For example, carbon offsets, because it's a new asset class. Yeah, that is not so tied to legacy. So these are various possibilities that may happen, and when we say it may happen soon, I'm not really talking about within the next 1 or 2 years.
So you have kind of, again, alternate venues like air carbon, right, exchange, that is kind of operating in the carbon exchange space using blockchain. DeFi was this area of providing financial inclusion, serving the unbanked, or serving those that do not want to get into the regulated space. But more and more DeFi players are looking to be more mainstream, right? Looking to kind of attract or to make themselves more appealing to institutions. And in order to do that, they need to kind of adopt certain regulated practices. For example, having crypto custodian, for example, just to give the players a peace of mind.
You're right. And in fact, the example you brought up, having custodians, it also opens up the access to large investors, because large investors will want to have a custodian. These are your fund managers, for example. Yeah, so therefore, for DeFi or any product, not just DeFi, to really have the large traction, institutional traction, there needs to be a ecosystem around it, not just a truly decentralized.
And how do you see that coexisting? There, both are side by side. Do you see overlap? Do you see the regulated space and the DeFi space crossing?
Definitely, there will always be a pure traditional finance, and there's a pure DeFi, and there will also be some form of a hybrid in between. And I see all three coexisting at the same time. Yeah, because nobody's going to replace anyone. Just because banks are huge doesn't mean that DeFi will go away. Just because DeFi is huge doesn't mean that banks are going away. And of course, this doesn't stop somebody from innovating and operating a hybrid model.
It's still a evolving space, right? This whole blockchain and digital assets. There is, in terms of DeFi, there are investor interest in a lot of crypto assets. They are also getting into the tokenized space, getting more traditional assets to be tokenized and appealing to be put on the DeFi exchanges, so to speak. The same thing is happening on the regulated space, but perhaps in terms of speed, the DeFi is moving faster than the regulated space. And the DeFi is where they are already doing deals and a lot more.
Naturally, DeFi will move faster, yeah. But again, now where you already mentioned for custodians, they will be serving a larger investor, and if the larger investor wants to get involved in DeFi, there will be a requirement for custodians to get involved.
And you have players like DBS that's kind of leading the way, like kind of moving from mainstream into becoming a digital exchange.
Yep.
And also, they have planned to provide crypto custodian services. So effectively straddling both regulated and the DeFi space. Yeah. And there are more, right? So I mean, on a recent interview we have out of the US digital signature bank, okay, that provide the exchange, right, from crypto into fiat and so on and so forth. And you have Kraken, and then there are a whole lot of European players out of Switzerland, out of Lithuania, and so on and so forth. They're straddling the space.
No, these regulated institutions that are entering DeFi, they are still having to know their customer. They are not there to do money laundering. In fact, they are there to have anti-money laundering, and that's great, because that brings more credibility to the asset class in general.
So, while is it correct for me to say that a lot of digital application of digital crypto assets for actually they are more established in the DeFi space? The regulated space, right? The banks and the exchanges are taking a more cautious approach. There's been a lot of experiment, a lot of trials, a lot of pilots, proof of concept, but haven't actually kind of gone ahead.
Naturally, I mean, the duties of a regulated financial institution is to ensure that things are done in a proper manner. So naturally, they will have to overcome certain milestones first.
The technology is there, but in terms of having common standards, interoperability, as you mentioned, getting more ecosystem intermediary, okay, as you describe them, to kind of be traction, right? To have traction, and then to have them start doing things on the platform on a larger scale. That's not immediate yet, right? So a lot of this project from Ubin to Benja, the project that we are working on, they are still waiting for greater traction to go live or go mainstream, so to speak.
But I wouldn't be surprised if it comes at a big bang, where because in the background you have, it's not even a secret, right? So many institutions are looking into DLT, are researching DLT, are doing something with DLT.
When do you expect this big bang to happen?
I can't tell the future, but for sure it's not that far away.
What's your prediction? Within the next year?
Within the next 12 months, for sure, yes.
What will be driving it? Will it be ESG, green finance, green bond that is driving it?
I believe so.
Over the past week, right? MES on the back of the Fintech festival have got this whole framework that was announced. Do you think those will create impetus to drive what's happening on the DLT front in terms of capital markets lining up for more sustainable, more green finance activities?
Definitely, for sure, yes. Okay, in fact, if you notice the announcement made over the last week, right? Okay, every one of them talks about this being a conversation from a year ago. Okay, so which means that when I say a big bang is coming, there is actually a lot of background work that I know is happening in the background. Yeah, and when this background work is advanced enough, developed enough, tested enough, it will come in a big bang of multiple institutions together at one go. That's more meaningful than, let's just say, we suddenly launch a live bond, but only one or two participants. That's just not meaningful enough. So it would be more meaningful if as an industry, and then as so many things are happening in the background with testings and various POCs, as you call them, they will come online because they are all now on an integrated fashion. And I do personally believe ESG is one of a key catalysts. Yeah, because climate change does have a timeline, and the timeline is shrinking as we speak. Okay, so therefore, any way to improve the way of tracking these physical assets, okay, would be welcomed by the entire industry.
And you see that happening, that big bang will start emanate in Asia, Singapore specifically?
I hope so.
Okay.
Naturally, I'm sure many different places have different projects going on at the same time.
Give us a sense of the ecosystem here in Singapore, or in the ASEAN plus 3. I mean, Stacks is one, Market Node. I'm sure that there are many others. Who are some of your ecosystem partners?
I mean, if you look at the Singapore ecosystem, MES has been very, very supportive. The entire, it's not just the MES. Okay, I mean, if you look at the government in general, right? Enterprise Singapore, EDB, and of course, various other government agencies. So the entire Singapore ecosystem is rather supportive of technology and from MES perspective, fintech. Okay, so that's where there's a lot of confluence of factors, okay, including emerging stronger together, digitalizing various aspects of society. This in Singapore, there are multiple projects going on, not just in blockchain, not just in financial services for blockchain, but also in industry like supply chain, trade, logistics, etc. And also not just in blockchain, but with our partners in IoT, data analytics, etc. So that will form a complete solution.
But the big bang in terms of capital market application, where you will have this big takeoff in digital bonds or digital securities issuance. Asia could be one.
Yeah.
Europe, Switzerland.
It could happen concurrently, because many banks are doing many projects at the same time.
Are there other areas that you think that is kind of on the horizon, that you see having a big impact on this area?
In general, the ESG, sustainable development, okay, would be a very meaningful thing, okay, and of course, highly impacted, okay, through the use of better technology. So not just blockchain, okay, but of course, general
IoT.
So that's something that we also look forward to contributing in our own way. Okay, whereby we provide the underlying infrastructure to allow various technologies to transcend different projects and use cases. Okay, and also have a common nexus in providing the insights.
I mean, we are still at the start of the curve, so to speak. So there's a lot more that will develop, and I'm sure we will continue to have this conversation as we move towards the next milestone. And also to mark your prediction, right, in terms of the big bang that will happen within the next 12 months. And we first heard it from Benjamin Soh of STACS. Thank you so much, Benjamin.
Thanks, Moonping. My pleasure.